What's going on, traders? We're back with another video. In this video, I'm just going to be going over the fundamental analysis that I'm going to be implementing into my trading from now on. Shout out to Alfred in the Discord group. He's helped me out a lot with this, and just want to say thank you to him, even just for bringing up the idea, and he helped me out build a spreadsheet and everything. So I just want to say thanks to him. And I just want to say thanks to all of you guys. I know I haven't uploaded a video in like 2 weeks. I apologize for that. I haven't been feeling too well. Feeling better now. But I just want to say thanks for over 200 subscribers. That's huge. Hopefully this channel can keep growing and we can keep learning from each other. And let's see where this can go. But anyways, I just wanted to show you guys this spreadsheet I've been working on with, like I said, with the help of Alfred. And I think he got the idea from a YouTuber called Trading 180. I definitely suggest checking him out. He's got a lot of good videos about fundamental data, using it with supply and demand. And essentially what it is, it's a whole ranking system which I can go through. And essentially it ranks the strongest currencies and the weakest currencies based on economic data, like GDP year over year, quarter over quarter, debt to GDP, interest rate, inflation rate, unemployment, all that good stuff. And you know what? A lot of people think it's really complicated, and it really isn't that complicated. Obviously, there's some things you're going to have to learn. But, you know, I have a passion for this stuff, so it's really not like I'm not killing myself learning all this stuff. So to me, it's not a big deal at all. But if you don't want to use it, that's totally fine. But I'm going to be implementing it into my trading because I think it's pretty important. Because, sure, supply and demand is very important, and it's where it's where we identify buyers and sellers, and I'm definitely going to be using supply and demand still. I'm not going to stop using it. But I just want to use the fundamental analysis to kind of pair the weak currencies against the strong currencies and then find a supply or demand zone in that direction and only trade in that direction. So essentially, like if, let's just say Australia, the Aussie dollar is the strongest right now according to this data, and the euro and the dollar are the two weakest. So, that could be something that you could do. You could go long the Aussie dollar against the euro or the United States. And so, essentially, looking at this fundamental data, I'm going to try to ignore all the shorts against the Aussie dollar since it's strong according to the economic data. So, we're not really trying to predict anything. We're not trying to predict news events or, data that's planning on coming out. We're just kind of looking at the data and ranking them and kind of figuring out, which ones are stronger, which ones are weaker. And what that does is it prevents you taking trades in the opposite direction. Let's just say the Aussie dollar is strong and the US dollar is weak. So you're essentially going long, or it's Aussie US dollar. So you'd be going long, right? You might be able to short the Aussie dollar and you might get like a 1-to-1 move, right? But when you look at the fundamental data, it's the Aussie dollar is the strongest, and guys, like this is what people look at when they're investing in currencies, right, in countries. So I think that we need to be looking at that too. I think it's pretty important. But essentially, what it is, this is the data that I have, and I get all this data from this website. It's just tradingeconomics.com. You click on this button, this here, and you go down, and it has all this data for you. And you essentially just find the data and then you just plug it into your own spreadsheet. I don't use all of these categories. I use everything here except for government budget, current account, and population, just because, I don't know, I'm just trying to get the most important data, which in my opinion, this is all very important data. Interest rate, inflation, and GDP is, some of the biggest things when it comes to fundamental data. So essentially, yeah, every week I'm going to be coming here on every Sunday or Saturday, changing all of this data as I see fit, and then ranking them. And how I rank them, I have this other sheet, and this is the equation sheet. It's very similar to this other one. And essentially what you do is you start at the GDP, and you rank from 1 to how many. I don't have New Zealand here. I don't want to trade the New Zealand dollar because it's very similar to the Aussie dollar. So I only have these 7 currencies. So everything is ranked to 1 to 7. So essentially the lowest rank. So right here, the total Aussie dollar is 18. That's the lowest. So that's the strongest currency. So the lower, the better. But essentially all you do is you just find out what's the best and what's the worst. So for GDP, United States is number one. They have the biggest GDP. So what did I do here? I put number one. Then it's Euro, Japan, UK, Canada, Aussie, Australia, and Switzerland. So you rank them like that. So far, just looking at GDP, United States is number one. United States is the strongest. But then as you go on, it's really not. So GDP year over year, you do that. Same idea. Basically do the same thing. For GDP year over year, obviously you want the lower to be better. So that's the thing. You need to learn. You kind of need to learn about what's better for all of these. So GDP, the higher the better. Obviously, GDP year over year, you want it to be as low as possible. The lower the better. That's why Aussie is number one for GDP year over year, because they're the only one that is actually not negative year over year. The euro is minus 15%. That is the worst. So that therefore they get the 6. The reason they get 6 and not 7 is because two countries are the same, the UK and Japan. So they both got a score of 4. But that's how you do GDP year over year. Same thing with GDP quarter over quarter. Obviously, the higher the worst. United States killed it as the worst. They are number 7. Minus 32%. That's really bad. And then I have debt to GDP ratio. Japan obviously killing it. The worst. 236%. That's completely crazy. So Japan is the worst. Switzerland gets the number 1 ranked because they only have 41% debt to GDP. And interest rate and inflation. This is where I kind of took my own economic background and kind of, because the problem is with inflation, their goal is 2%. So I know Alfred, he does something where, because each country, they have like the 2% inflation goal. So what he does is he ranks it like that. So he'll rank the inflation rate. Whoever's closest to the 2% goal gets number 1 in his books. But for me, for my economic background and my economic understanding, I would rather have I'd rather have deflation, essentially, which is what Switzerland is having right now. Their currency is gaining value. Their inflation's at minus 1.30%. So in my opinion, that is the best. That is just my own, and you guys need to do your own research on that. I know some economists will say a weak inflation is weak for the currency. I don't really understand the logic behind that. I kind of do, but in my opinion, the more inflation, the worse. So that's how I am going to be rating the inflation. Like I said, I know another guy who his number 1 is whoever is closest to the 2%. So my number 1 right here is Switzerland because they're minus 1.3%. And his number 1 would be Canada because they're the closest to the 2% target. But that's just my own opinion. I'm not going to be doing it like that. And then interest rate, pretty much the same thing. I prefer a higher interest rate, the better. I mean, I can kind of go into an explanation for that. It's essentially because other countries and investors, they buy the government bonds, and obviously they want a high interest rate yield. So with Switzerland having the highest interest rate, which is not even high, which is not even a percent, that to me looks like the most appealing. If I'm going to invest in a country, Switzerland looks pretty good. Yeah, okay, their GDP is the smallest. I get that. But, their inflation rate's not bad at all, and their interest rate's the highest. So a return on my investment, that wouldn't be a bad return. So that's the interest rate. Obviously, Japan is the worst for that. They're number 5 because a bunch of countries tied. So that's the interest rate. And then unemployment, obviously, everyone knows what that is. The highest unemployment is obviously the worst. And you essentially plug in all these numbers, and then you add them up. And that's how you get this number. And then the lowest is the strongest, the highest is the weakest. So as you can see, United States and Euro, they tied for 38. So they're the 2 worst ranks. And then Australia, Switzerland, and Japan are number 1, 2, 3. UK is number 4. And then it goes Canada's number 5. And then this is just something that I wanted to make up. It's kind of a good visual. It tells you what the strongest ones are. I just use the flags for it. just a quick little visual. But yeah, essentially you just want to pair up the currencies, right? Like let's just say you want to look at Aussie and Canadian dollar. Well, Aussie's number 1, Canada's number 5. So I probably want to be going long against the Canadian dollar. And that doesn't mean that the Canadian dollar can't be rallying against the Aussie dollar, but I'm only going to be looking for shorts from that on. So that's what you kind of do. You kind of use this and you kind of pair the currencies together, strong versus weak. And then if they're kind of in the middle, like Canada, UK, they're both pretty close. I probably won't even touch that. Or the Euro USD, they're both tied. I don't really understand. I don't know what to do there. Like I'm just gonna probably leave it. But yeah, it kind of gives you the fundamental background, which is what investors are looking at, and I think it's pretty important. If you guys have any questions, please leave them in the comments below, and I'll try to get back to you. All right, guys, take care.